Hey guys, and welcome to your Money Q&A question of the day. I'm your host, Stacy Johnson, and this answer is brought to you by MoneyTalksNews.com, serving up the best in personal finance news and advice since 1991. Today's question comes from Gary, and Gary says, Stacy, are REITs a good, safe investment? Well, let's do three things here. Let's define what a REIT is, and then go over some of the advantages of them and some of the disadvantages. First, what's a REIT? REIT, R-E-I-T, stands for Real Estate Investment Trust. Real Estate Investment Trust. Sounds complicated? It's not. All it is a stock that trades on an exchange like any other stock, but this particular stock has a couple of unique features. First, it's a company that only buys real estate, hence the name Real Estate Investment Trust. And also, because the trust part means that they've got to pay out 90% of all the income they make to their shareholders. So if they're collecting rents, obviously, it could be any kind of real estate, by the way. It could be residential, could be commercial, could be malls, could be office buildings. And they'll tell you what kind of real estate that they invest in. So they're collecting these rents, and they've got to pay out 90% of their income in order to qualify as this investment trust. So that means these things often have really high income from them. You can get really high interest. It's really dividends, but and so you can get 5, 6, 7, 8%, even more on some real estate investment trusts, which makes them pretty cool vehicles for people who are looking for income. Consider perhaps retired people, for example. So real estate investment trusts can be pretty good. Are they safe? Well, it depends on what they are, because they can also use leverage, just like when you buy a house with a mortgage, they could be using mortgages to buy properties, so they could have high leverage, which means that in a downturn, they could theoretically go bad. But generally speaking, and I say generally speaking, real estate is a relatively stable investment, depending on the kind that it is. Like I wouldn't want to be buying malls right now, but I wouldn't mind buying apartments right now. So I think, depending on what kind of real estate investment trust it is, you can look at its track record and see how it's done. And if I needed the income, I think real estate investment trust can be a good idea. So we've gone over some of the pluses, paying out a lot of income. You could have appreciation in these things, obviously, because real estate can appreciate in value. So these things, you can buy them at one price and sell them at a higher price, down the road. So you've got good income, you've got appreciation potential. A lot easier to buy than buying real estate, right? I mean, it's pretty easy to invest in a stock versus going out, finding a real estate property, putting all the money down and financing it and doing all that stuff, fixing it up, managing it, So it's very convenient to have a real estate investment trust versus going out and buying your own property. Now, and then disadvantages of real estate investment trust. Well, it's a little more complicated at tax time because your return, when they're paying you these interest payments, these dividends, some of them can be return of capital. So it's a little bit more hassle at tax time. Let's put it that way. Also, there's some advantages to buying your own real estate. I mean, obviously, if you're good at it and you can use your own leverage, you can go out and buy stuff and you can conceivably make more money than you could with a real estate investment trust. But it's almost not a great comparison because buying property is so much more difficult than buying a stock. But generally speaking, bottom line, should you buy them? Hey, why not for a portion of your portfolio, especially if you need income and especially if you're interested in real estate. So I'd say, Gary, go for it. And the rest of you as well. Hope you guys got a good answer there today, and I hope I'll see you right here next time.